Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
So the story from the street is that there is some semblance of recovery on a couple of PSU banks. SBI leading that charge. Axis Bank has had a recent swing from the lows of the day. Good time to get some more trading ideas in. Sandeep Wagle is joining in. Good afternoon, Sandeep. What's on your list today?
Afternoon, Surabhi. I would go with the sell in the Sriram Transport Finance only if it breaks 1270. It has bounced back from the current level, so I would wait for 1270 to be broken. 1277 stop loss, 1230 target, and a sell in Adani Ports, stop loss of 396, target 381.
All right, Sandeep, thanks a lot for those trading ideas. Let's now go back to the big story. Bhushan Steel is locked in upper circuit after Tata Steel emerged as a top bidder for the company's assets. The street, however, remains divided on the transaction. We've been getting you voices through the day, but to take the discussion further, we have with us Sandeep Parekh, founder of FinSec Law Advisors, Anil Sanghvi, chairman of Icon Investment Advisor, and of course Tulsian, who has been tracking this story for long and has been bullish on Bhushan Steel. Gentlemen, good afternoon. Mr. Sanghvi, first, your thoughts. Do you think the equity shareholders should get something out of this deal? That's what the market is telling us, because otherwise the stock should not have been 20% higher today.
Definitely. I look at it, the minority shareholders, and particularly in the listed company space on that, they are as much capital providers as any other lender to the company. So to treat them at par with promoter may be a very, very harsh treatment. And according to me, the capital markets over a period of time have come to a stage where you are seeing equity participation by the man on the street. So if we have this whole situation panning out, that all the equity is to be completely written off before a recapitalization takes place by the new bidder, will be a very, very harsh, and I think it will be very ironical for the Indian capital market.
So let me also bring in Sandeep Parekh into the conversation. Sandeep, what I think everybody is now trying to also understand exactly is the next steps in the process. So do we see, as a resolution plan is put in place, are we going to see a write down of equity? Will there be a reduction in the current equity base of a company like Bhushan Steel? What is the next step?
So see, the logical sequitur is that the entire equity gets written off, and there's no real distinction, as Mr. Sanghvi was saying, that there should be. But in law and first principles in corporate history, it's usually equity is completely written off, and the debt holders come in, or the new basically the person who comes in with new equity gets all the equity, and in this case, I believe they're sharing part of that equity with the lenders. So, I mean, typically, it makes no sense for the existing shareholders, unless there's of course fraud, in which case promoters deserve to go and the minority shareholders need to be protected. But the whole concept of equity shareholders is that if there's downside, their downside is protected. They don't need to sell their houses. But at the same time, with the limited liability, they also have the risk of losing their money. So that's exactly what has happened in this case. So I really don't see why the stock price is moving up. But maybe they'll get some kind of a kicker out of this whole process in which they get a little bit of equity.
No, Sandeep, actually, let me come in on there. The rationale being, obviously, and we'll get Mr. Tulsian's view in just a moment on this as well, as he's been explaining, the rationale being that it's a good underlying asset. The new promoter that's coming in, it will be the market's perception that it's a promoter with a high pedigree. So therefore, the market is going to ascribe a value. And if the market has faith, then the share price should move higher. But you were saying before that faith is exhibited by the street, should we be prepared for a period of a low price, maybe, 1 rupee share value? And what happens? Could there be a period when the share stops trading? Because I believe SEBI permissions are going to be required. How will the equity structure look? Because in Bhushan's case, what we understand is 12% of the equity, the final equity structure, 12% of that will go to the bankers. That's part of the deal.
Yes, exactly that. The process is typically that the entire existing equity gets wiped out and the lenders come in. Now, the lenders kind of, in a way, share their equity, the new equity, with the whichever is the white knight in this case. Let's assume Tata's come in as the white knight. They get 100% of the equity, out of which 12% or whatever odd they offer to the lenders, which becomes their upside. So the lenders take a haircut on the debt, and they get an upside on the equity, which is limited to 12%. So I think that's fair, and that's how it should work. But as you correctly pointed out, the existing equity would come down to some nominal number before this entire process takes place. There's no on the second question, there's no real clarity on whether trading is going to be halted. In fact, we have represented to SEBI that it should not, and let's see how SEBI takes it in terms of trading halt for that period.
Okay. Mr. Tulsian, for those who have joined late, of course, you have been maintaining a positive stance on Bhushan Steel, but to take forward the point that Sandeep mentioned, of course, Mr. Sanghvi talking about that equity shareholders should also get some value, and this should also be treated as capital given to a company. But Sandeep is making a point that normally in these cases equity is written down to zero. So for those holding Bhushan Steel shares right now, what's the way forward now?
Take my positive view here in discussion, because we are taking the legal stand on that, and let me take the legal stand here. Firstly, let me tell you that equity is a pari passu instrument, and whether it belongs to the promoters or it belongs to the public, both have the same rights. But why promoter gets shrunk? Because promoters have pledged their shares in favor of the lender. In fact, in the morning I have clarified that. Take the case of specifically for Bhushan Steel. Promoters are holding 60% of stake with them. 70% of that is pledged. I presume that it must be more, but you take the whatever disclosure which they have made to the stock exchanges, about 71, 72%. So that means effectively and the process of invocation by the lenders of the promoter shares held in the Bhushan Steel have already started. In fact, we have seen yesterday 1 or 2 lenders having initiated that notice. So I am presuming that 42%, effectively 42% stake will flow to the lenders going forward. So that means, and number 2, if you take a view of liquidation, then what Sandeep has said is will hold correct, that yes, equity will have a zero value. But in fact, let me be very categorical and let me be very blunt. The kind of air which has been created that equity has a zero value, in which channel has also played a very important role in highlighting the same thing, one-sided, that equity has a zero value, doesn't apply here, number 1. Number 2, take the case of whatever we have gathered from the public informations. Tatas have offered 35,000 crore upfront as a this one, whatever it is, plus 12.7% stake. In the morning, I have said that any promoter who will be, any potential acquirer who will be coming in acquiring this company, we eventually will be having 75% stake, which is permitted by the SEBI. SEBI have relaxed lot many things in respect to open offer, in respect to issue price. They can issue the shares to themselves at maybe at 2 rupees, maybe at 20 rupees, maybe at 100 rupees. So in any of this kind of resolution process, the new acquirer will be having 75% stake. That means there will be 300% dilution in the equity of any company. Now, if I take the case of Bhushan Steel, 45 crore equity will rise to about 180 crore, of which 135 crore equity will be held by the Tatas. And if you take 42% of 45 crore, that will come down by about maybe 75%, effectively to 11 to 12%. So here 2 proposals have come here where JSW wanted lenders to forego their entire equity, while on the other hand Tatas have allowed them to continue with their 12 and 13% stake. And probably lenders will take a call that if we remain invested in the company with eventual stake of 13%, probably the value can rise to about 1,000 crore to 5,000 crore over a period of time, maybe in next couple of years once the Tatas comes in, because everybody knows that this is a pricey asset. So this is the whole situation which we need to understand and take a call accordingly. You just can't say that and come on any law, show me in any law where without the consent, or NCLT have not been given the power under IBC also where they can direct the public shareholder. You can always invoke the pledge shares. Nowhere show me in which law, whether it is in Companies Act or whether it is in IBC code, where it has been allowed that en bloc equity, existing en bloc equity can get written off on the company getting acquired. Now come on the existence of this company. Bhushan Steel will continue to exist as a company under the new promoter. If we are talking of Bhushan Steel, then Tata's in this case, even government has clarified in respect to the carry forward of losses that yes, the met applicability will not happen if the carry forward losses and depreciation both are taken together, which is now allowed whichever is lower. So I don't understand why this all confusion exists in respect to the equity getting written off. There have been some kind of vested interest news having initiated. I'll be very blunt and saying that Sajjan Jindal rather have taken a lead in saying that it should get suspended, trading should not happen, they should get written off and all that.
Sure.
But because they have a vested interest, because they want to bid for the companies at a very low price, and this is
Mr.
what is
Tulsian.
happening. But I'm taking a legal stand. I'm not taking my position or my positive view on the stock. That's a different case. That's taking an investment call on a stock. But I'm just trying to clarify the legal positions on Bhushan Steel as it persists, which I have at least understood in my view.